Hi, I'm Liz Naumovski, host of Finance is Personal. When it comes to your finances, you should never feel that you have to carry the weight of making investment decisions on your own. The good news is there are plenty of resources that can help you. For those of you with business-savvy minds and can easily navigate through the world of finance, it's still worth the time and effort to consult with a financial advisor. Doing so will help ensure that you're on the right path for financial success. And it's always wise to consider getting advice from a qualified professional. Find the one that is right for you, and it'll pay off in the long run. Like any relationship, though, active listening and learning is important. So take the time to get to know your advisor and give them the time to get to know you. Joining me today to discuss how taking on an active role in your finances will help you get more out of your advisor's relationship is commercial litigator, author of Communication Risk, How to Bridge the Client-Advisor Gap to Protect and Grow Your Business, and public speaker Ellen Bessner, partner at Babin Bessner Spry. Welcome, Ellen.
Thank you. Thank you for having me today.
I've been really excited about having you on today because there's so much information out there that a lot of investors don't understand. And in doing today's show, it's a really good opener and educational show to help people understand their statements and their advisor relationship and everything else. So let's begin with, there's so many people that say they don't understand their statements, right? Or what their advisor is talking about. So what happens is they tune out and they hide their statements in a drawer. So what do you tell people and what should they understand and learn from that?
So it's a great topic. I love the topic because most of us, when we open up our statements, they are not easy to navigate. The firms that prepare these statements have this very strict regulatory stuff that they need to qualify and have everything done in a certain way, which doesn't necessarily mean that it's that easy to understand.
But those regulations are put in to help the consumer.
That's for a whole other day, Liz. But today, to help our friends,
right.
What I would suggest is that we really make it easy for them, and they need to understand that most of us have trouble with these statements. It isn't just them, because when you open up the statement, you think, oh my God, I'm not that smart, I'm too embarrassed to ask. The key is to sit down with your advisor or with the assistant of the advisor, someone in their office, and say, take me through this thing. I want to understand the pieces of it. And you might need a tutorial like more than just once to really get all the components. And then you can decide, well, what is it that you want to look at in this statement? You don't have to spend an hour looking at it. You probably need about 5 minutes once you really understand it.
Right.
And so the key is to not feel insecure about asking those questions and get those tutorials. And I tell the advisors as well, when you have a new client, make sure that when they get their first statement, you have a dialogue around this.
So off the top of your head, if somebody receives a statement, what are the 2 or 3 really important things that they should look at?
It's so specific to the client, but for sure, I'll tell you what I look at, right? So specific to me, what I want to know is, of course, I want to know if I'm doing okay.
Right.
So on my statements, it has a line that says what I did last month and what I did this month. So I compare the two, and
However,
I'm like, yes.
That's a short-term comparison as well.
You're absolutely right, and I don't freak out if it's down.
Right.
I just want to know.
Right.
Right. I don't start calling my advisor. Why am I down 2 pennies this month? It's just, this is all information.
But the key too is, so you look at your statement every month. I get that, but that's not a really good indicator, and looking at your account every day is not a good indicator either.
Unless you're a day trader, which most of us are not,
right.
We're in for a longer road. It is really important not just to be focused on the returns. You want to understand, for example, how much higher risk, how much lower risk. I would, drill it right back to looking at your Know Your Client form, again with your advisor,
right.
And understanding what they understand about you. The transparency piece is so key.
Right.
Because getting to the statement is kind of the end of the story. The beginning of the story is getting to know your advisor and them getting to know you.
So let's step back then. The KYC, Know Your Client, that's huge in our industry. And the thing is, when you're an advisor, You have this huge application form that you need filled in. A lot of people don't want to divulge their personal information. They get upset about it. They feel that they're being violated. They don't like to share how much money they have or don't have. So why don't you explain to everyone why that is so important? Because I think that's the key when you're opening up an account.
So you're absolutely right. For the advisor to do their job, they need to understand properly, well, they need to understand what the client goals are.
Right.
So right away, to even figure out what the goals are, they need to have dialogue, open dialogue. And a lot of clients don't really know what their goals are. It's, it's something that needs to be formulated.
And we'll talk about that in the next segment. We'll go through all the goals and everything.
Perfect. So in terms of getting to know them, they need to be open with their advisor in order to even figure out how to get to the end of the path. Right? So it's the same thing, use an analogy of going to a doctor, right? And the doctor asks you what's wrong with you and you tell them it's none of your business. Or they say, like, how did you get that rash that you're complaining about? You say, that's private to me, none of your business.
Right.
Like, how are they going to diagnose what's wrong and help you get better?
That's
right?
such a great analogy.
I've got so many of those. But that's the reality, right? Is that clients need to be with an advisor who they feel comfortable enough with to divulge all that personal stuff. And if they don't feel comfortable, then they shouldn't have an advisor, or they should try and figure out with the advisor, why is it that they don't feel comfortable?
And I think the key is, just like any relationship, if you and I become great girlfriends, or you're with your boyfriend or significant other, you have to be transparent. And you have to be able to communicate well. And I think the problem is a lot of people don't communicate with their advisors. And it goes both ways.
Yes, and part of the reason is exactly what you pointed to, which is that it's very personal and private stuff, this stuff. Apparently a lot of Canadians are particularly very private about how much money they have, where their money is, and they're also embarrassed.
Yep.
Some people are embarrassed because they haven't, in their own mind, they're thinking, oh, the advisor's judging me because I didn't save enough, or I spend too much, or I don't earn enough to meet the goals that I want. And so they clam up and they don't want to share.
Okay, so we are going to continue on with that. Ellen and I will be back after the break to talk more about the importance of building a healthy relationship with your financial planner or advisor here on Finances Personal. Welcome back to Finances Personal. I'm Liz Naumovski, and here today with me is Ellen Bessner, commercial litigator, author, and speaker. And Ellen, you and I were talking about the fact that, when you're putting your information down on the Know Your Client, you want to be private. But there's a huge generation out there that was taught to be private. We were always taught not to divulge, not to talk about things that happen in the home. Don't tell people how much money you make. Don't talk to, even throughout the family, we all grew up and we didn't want to discuss money. So what do you do with that?
So that's a great question. Here's the problem. When you get to this advisor, they are the person who's going to help you with your money.
Right.
And they're going to help you achieve your financial goals. They need to know the whole picture. So the form, that KYC form, is only the end of the conversation. It's kind of the summary of what they learn about the client in total. And so what's so important is that when an advisor asks questions, you need to be open with them. Otherwise, they can't help you as well as you want them to. That's the whole idea, right?
And the truth is, you have to be transparent and you can't lie about anything.
Oh, yes. Well, lying is the worst, because then they're going to assume that certain information is true, and they're going to go down one route because you've told them that, and then it's not going to get you where you want to be because it's based on wrong information.
Right.
And here's the thing, I don't believe clients sit there with their advisor and say, I'm going to lie about this. I think they don't know the answer necessarily.
Right.
So an advisor might ask, so in the next 5 years, are you saving for something? Or is there a goal that you have in respect of your money? And the person may not have thought about it,
right?
Or they may not be able to articulate it. And they should just say, that's a great question. Can we talk more about that so that I can explore that with you? Because I'm really not sure what that should be at this stage.
Right.
Can you help me with that?
And that's a good answer.
It's a perfect answer. It's better than, I want to buy a car when you don't want to, or I want to buy a condo when you really don't even know if you want to do that, or whatever it is, right?
Well, it's interesting because I know for a fact there's a few clients that, I've talked to or I've known about, and they get embarrassed if they have, say, a monthly pre-authorized checking, a pack that, a monthly authorization to go into their RRSP or something, and sometimes they've overspent or they've lost their job, and they don't come back to you and say to you, listen, I've lost my job or whatever, but the account bounces, but they're embarrassed to tell you.
Right.
And I think the key is, again, full transparency, and we shouldn't be embarrassed if we don't make more than our friends, or if we don't make, if we don't get a lot of big bonuses, or if we don't have a huge house, or if we've lost our job. I think it's really important to actually tell your investment advisor or your financial planner exactly what's going on with you.
And you're absolutely right. We tend to be private and embarrassed, but I can tell you, for me, with my advisor, I'm so comfortable with my advisor. I don't make any decisions without picking up the phone and saying, okay, so this is what I'm thinking. How would you go about achieving this goal? Or if something happens and, I'm really worried about my financial situation, I'll call my advisor and I'll say, I'm nervous. I'm feeling nervous, and this is why. And then they can say, oh, okay. Right away, adjust, right? Mm-hmm. Or, there's a lot of talk in the press about the stock market, and I'm really nervous about having so much in the stock market. Oh, boom, right? But if you don't express this and explain your nervousness, like, they may say to you, you know what, you don't have too much in the stock market.
Right.
They can talk you down and
quell your emotions.
Exactly, and help you.
Right.
And they also will understand you better. Right? Because if you are nervous about risk, maybe they didn't get that from the previous conversations.
But that's a really important thing too, risk tolerance. Because a lot of people think, I don't want any risk, which is wrong. And a lot of people think, I want a lot of risk, which is also wrong.
Yes, so there's something that's now changed, and it's called risk profile.
Right.
It's all very fancy. Even though you're right, on the KYC form it's called risk tolerance. But there's so many components to assessing a client's risk that advisors need to explore with the client. And it isn't a question of just saying to the client, what's your risk tolerance? And the client says, oh, what do you mean? And they say, well, low, medium, or high. And you go, oh, low, medium, or high, right? It isn't like that.
Right.
It's really about, how do you feel when you read the paper, or you turn on the news, or you hear that the market has crashed.
Or how much debt you have.
Or, well, debt is a whole other ball game, right? Because when you talk about debt, it's like, well, if you can live with your debt, then you're comfortable with it. But some people, they change. You see, that's the other thing. In this world that we live in, everybody's changing all the time. Quickly.
Right?
So you might be going back to the risk question, you might be very comfortable, let's just say, with a medium risk world in your account, and then something happens, you lose your job. You don't tell your advisor, and they don't know, oh, now I'm so nervous about losing that money because that money's even more important to me. If you don't pick up the phone and call your advisor and tell them, let me just tell you, I've lost my job, then they can say, okay, so how much liquidity do you need in the next 6 months?
And liquidity means how much cash do you need within the next 6 months?
Right, and or they can ask you, how long do you think it'll take you to find a new job? And you might say, it could take me a year. Or you could say, I already have a bunch of leads, I think it'll only take me a couple of months.
Right.
Your advisor should make sure that they look at your account and see how they can help you make sure that you have the cash available without, a tax bill or whatever, right?
That's big too, because a lot of people think, I'm just going to cash things out, I'm going to sell my stocks, get the cash, and if it's in a cash account, it isn't a registered account, there are tax consequences.
That's right. So when you put your money into a registered account, you defer paying your taxes. So if you take it out, that means, oops, the tax bill goes up.
Right.
And your advisor will explain that to you. And if you have that short-term need for cash, they can choose things that will do the least damage to you.
Right.
And make sure that you can pay your bills and not worry that something's going to bounce, to your point from before.
And survive.
Yeah, and feed your family or whatever it is. It could be that it's not just you. You've got children, you've got other concerns.
So Ellen and I will be right back after this break and talk to you more about how to deal with your advisor and how to make it work for you. Welcome back to Finances Personal. I'm Liz Naumovski. Joining me today is commercial litigator, author, and speaker Ellen Bessner, partner at Babin Bessner Spry. Ellen and I have been having a great conversation. I'm so into this right now. And I want to go back to the point that you had raised, that you talk to your advisor, but you don't just talk to your advisor about the portfolio. You talk to your advisor about personal things. I think it's important for people to understand what types of questions, because the advisor is there to help you all around.
So again, our lives are complicated and they change so quickly. So for me, my advisor really knows me well. Mm-hmm. My advisor knows my values, knows what I'm worried about, and when that changes. Right? So, and I'm a bit of a worrier, I have to say.
I am too. And I don't know if that's a female thing or not. And I worry about retirement. I worry about having enough money. So I'm a worrier as well.
Right. And we don't know. We're in a bit of a vacuum.
Right.
We don't know if we have enough money for retirement.
Right.
Like, how are we supposed to know, right? So you need to have this discussion with your advisor, and they need to also hear what your expectations are, and then they need to try to move you on your expectations if they're unrealistic.
Right.
So if I said, I want to retire next year, and I don't have enough money because I've put my kids through school, and there's still a bit on the payroll, then my advisor has to say to me, well, how much money how do you want to live when you're retiring? And I'm like, I want to live comfortably. And they're like, you better work another 5 years, right?
Right.
So that's the information you need. And then you just need to bite the bullet, and you need to work for those extra 5 years. But you need that information. If you don't share that personal stuff with your advisor, they're not going to know what you're thinking and help you plan to get there.
And I think the important part to that is you need to stick to the plan. You can't just talk about it and say, okay, I've got 5 years to work really, really hard and then I can retire. But you need to stick to the plan. You can't keep spending or
Right.
buying something new or taking exotic trips or whatever. A plan is there for a reason.
Yes, and so you might budget with your advisor, like I do. Mm-hmm. My advisor actually knows how much I spend every year. Every year we get together and we go through the list of what I spend every year.
Right.
And she asks me are these still the same expenses? And they're rough,
Right.
very rough. Like we're not getting down to the penny. But she's like, has your car insurance gone up? Has your house insurance gone up? Do you still have somebody coming to clean your house? Do you still have, how much are you spending on gas?
Right.
And it's all, we figured it out, so we have it all on basically one Visa card. I've got a lot of help with getting that organized. Uh-huh. And then from that, we can gauge, well, how many more years do I have to work, right? But that could change. I could have an emergency in my life, or somebody could have an emergency in their life. They could have a change. They could all of a sudden get a job where they need to buy a car. Things change quickly.
And health changes quickly as well.
Health, as you get older,
Yeah.
There's issues that you have to worry about. And then it's also, how much comfort do you have in terms of, do you have some money put away for a rainy day in
Yeah.
case something happens? Are you somebody who needs that? You might not.
Everybody does. Everyone needs some emergency funds.
I think so, but I'm
Yeah.
risk averse, that's me.
That's me too.
Right.
But we always talk about that because you never know what's going to happen tomorrow, this afternoon, this evening, a month from now, a year from now.
And you don't know what's going to happen with your spouse's job.
Right.
You don't know what's going to happen with your children. It's complicated, right? So because I'm, again, risk averse, I like to have some money put aside. And so, but if I have an expense, my advisor might say to me, you should use that emergency money. You have too much in there. Like, you go and use it, you know. Have a good time. Go on that holiday.
Take me with you.
Come on.
Okay, that'd be great.
So it's also helping you. Some people don't want to spend, right?
Right.
Some people are so nervous. I know my mother, for example, she would call her advisor, not the same advisor as mine, her advisor, and say, I want to go on this trip. Can I afford it? And he'd be like, yes, go on 2 trips, like spend your money. And she's got 4 kids and she wants to leave them something. And we say, no. Spend it.
Exactly.
Have a good time. Use it. Enjoy your life. Like,
Agreed.
don't sit at home. And so an advisor's great for that,
Yeah.
but they have to know you.
Okay, so let's talk about an advisor. How do you choose one that's right for you? Because that's huge.
So the first thing, that's the most important thing, is that they're registered advisors.
Right.
You don't want to be hiring somebody who's not real, doesn't have the education and the knowledge, and there are some people out there who you've read about in the paper,
Right.
and those are the scary ones to avoid.
Right.
So you want to ask them, what is your registration? And it's complicated because and I won't get into like all the different kinds of registration, but on their business card it should say like what company they're with, and you should ask them how they're registered, and then you can go on the website of the registration,
Right.
and you can put them in, and you can see whether they're actually registered there.
Or you can see the person's name.
Yes.
You can see when they wrote their exams.
Okay, well, you know better than I do. I've actually not gone on there, but good for you.
If you're registered with IROC, you go onto their website. I think it's iroc.ca.
Yes, it is.
And you go onto their website and you look for investment advisor and you type in the person's name and you see exactly
Their registrations.
what registrations they have, what year they wrote the exams in,
Yeah.
and if there's anything bad that they've done.
Right. So that's the registration to me is key because frankly, I defend advisors, and a lot of advisors make mistakes. And just because there's an infraction, if they're registered, it doesn't mean they're a bad advisor.
Right.
So the key is, are they registered? Once you know that they're registered, then we're all good, right? Because we know that the regulator is watching them, their own securities dealer is watching them. They could be mutual fund advisors, they could be insurance advisors, they could be portfolio managers. There's all kinds of, right? And they're all good if they're registered. So then what you need to do is interview. I think you should interview 3 different advisors.
Mm-hmm.
I just pick 3. You want to interview 2? Beautiful. You want to interview 5? Have a good time with it. I pick 3, just 'cause. So you pick your 3, and then you go and you meet with each of them, and you see who you feel comfortable with. And I develop questions for them. Like, for example, if you have an idea of what you want, like let's say you want to save for a house, you could ask each of them the same question. So if I wanted to save for a house or a condo or whatever it is, how would you go about that, right? And then they could help you. They say what their answer is, and you could compare them. You can also see how comfortable you feel with them.
Right.
So are these...
Because it's a relationship.
Absolutely. It's such an important relationship.
It is.
It's kind of like, again, I use the doctor analogy, right? Do you want to go to your doctor and feel nervous about asking them something? Or would you prefer to go to your doctor and feel relaxed about asking them something, right? So this is a person who you really need to feel comfortable asking questions and opening up to and not being secretive. So who do you feel most comfortable with? And are these the products? Do they deal with the kind of products you want if you know what those are?
And you know what? You are 100% correct. Remember to ask a lot of questions, and especially the uncomfortable ones, even questions you think shouldn't be asked. It often turns out that the answers to those questions are the answers that give you a better understanding and help clear up any uncertainties. Advisors are relying on your information that'll help you reach your financial goals. And like any relationship, both parties need to rely on each other in order to succeed and achieve any long-term goals. As much as you rely on your financial advisor, make sure you check in periodically to make sure you are only taking risks that you're comfortable with. Also, always read your statements. Don't just file them away in a drawer and forget about them. I'd like to thank Babin Bessner for joining me today, and you, our viewers, for watching. For more information about our show and to view past episodes, please log on to financespersonal.ca. I'm Liz Naumovski. Bye for now.